Once again, welcome to our regional webinar on the CIC, or in the simple language, unit trusts. It is exactly 6 minutes past 4 p.m. We will be starting our call today. Once again, I'm Derek Manshimwi, and I'll be your moderator for today's call. Here at Sanlam, I work as an investment assistant, and on the call today we have amazing speakers, and I'll be introducing them in a few minutes. But before we start, I would like to first give you a highlight of this call and why we are actually having this call. So I'll be able to turn off my video so that we can follow through. So the collective investment schemes or the unit trust industry in East Africa has been growing, and as you can imagine, so far we are moving over $7.5 billion in assets under management. And this actually has been seen as an emerging cornerstone of the regional capital markets. And this is actually offering investors access to diversified portfolios, improved liquidity, and professional fund management. When you look at East Africa only, some of the statistics across the region, in Uganda, we have about 8 CIS managers, and we have seen schemes coming up. So far, we have 10 plus schemes. In Kenya, which is the biggest market, has over 30 CIS managers and running over 120 schemes. In Tanzania, still catching up, 4 CIS managers running about 10 schemes. And in Rwanda, which is our new baby on the block in terms of this industry, has 2 managers and actually running 2 schemes. So on average, we have seen these CIC managers running 3 schemes, and this is really an intriguing development in our markets. And this growing momentum across the region really highlights a strong foundation for scaling this product as a trusted and inclusive investment vehicle in East Africa. So I've been really looking forward to this conversation. As you can see, this momentum. So today we shall have a chance to reflect, learn, and collaborate on this topic. And to set the scene, I will start by introducing our panelists. The first being Mbale, and Mbale Kabandamawa Mugadia is our general manager here at Sanlam Allianz Investments Uganda, and Mbale has been managing 2.6 trillion assets and is been working closely with clients and regulators. Mbale has 15 years of experience in investment management across Africa, including previous roles at ICA Ryan. Mbale also serves as a chairman of the Fund Managers Association of Uganda and is a secretary of Pan-African Fund Managers. Mbale is a CFA and holds postgraduate masters in financial management from the University of London, and has a bachelor's of economics from Makerere University, and actually completed the executive program, leadership program at Stellenbosch University. Our second panelist today is Teres, and is a senior research and market development officer at the Capital Markets of Uganda, and he has over 10 years of experience in both public and private financial sectors, including work in banking and treasury. And Teres is really passionate about growing Uganda's capital markets and helping more Ugandans to invest. Our neighbors from Rwanda, today's panelists, we have Mr. Tapel, and is currently the CEO of Capital Markets Authority of Rwanda. Tapero has over 24 years of experience in financial markets, including leadership roles at Botswana Stock Exchange and Central Bank of Botswana. And as you can imagine, Tapero is a former chairman of Committee of SADC Stock Exchanges and is a former president of African Securities Exchanges Association. Our other panelist, Ms. Ivy from BK Capital, is currently the acting managing director of BK Capital. And Ivy has over 18 years of experience in capital markets across Ghana and Rwanda. She has had several roles in the region, including data bank groups and SME associates and the capital market consultant. Ivy is a CFA and CIPM holder and is currently serves as a CFA Institute Africa Advocacy Council. So these will be today's panelists, and in real on this call, they will be sharing more about this intriguing topic, the correct investment schemes, or can call it unit trusts. And to set the scene, I will start with our first panelist, who is Mr. Tapero, to actually set the scene, to give us an overview, a background of this call. I'm sure he's on the call, and I'll be intrigued to hear what he's gonna say.
Thank you, the master of ceremony for the unit trust, and good afternoon, everyone, and good afternoon, everyone listening to this webinar. I think really I wouldn't dwell much more in terms of the integrities of the webinars because we have fund managers or unit trust managers who are going to be doing that. I think for me, it's just two lines that I need to say. I think the intention of the call really is to try to develop the East Africa market as a whole, those cross-border investments across East Africa, and also to take advantage of the East Africa community market, which is actually a huge market. And therefore, I think one of the strategies, not only speaking for Rwanda capital markets, but for Uganda, for Burundi, for Kenya, is to actually try as much as possible to tap into the excess savings or capital that might be out there to be attracted to the market, to look at investment instruments across the East Africa market and opportunities for investors. And I think this is the first of the many regional activities that are going to be coming up to see what other markets are having, what investors can take advantage of, which I think is a good regional initiative. And with all that, let me take the opportunity to thank all the organizers and all the presenters who are going to be presenting today, and over and above presenting their pitch respective unit trust. I think they will also impact a lot of knowledge to people who have attended. With all those opening remarks, I wish everyone a very great afternoon. Thank you.
All right, thank you so much, Mr. Tapero. Mr. Tapero really has been on a strategic front to actually shape Rwanda's capital markets and actually advancing the regional integration. Thank you so much. We will turn to a retrospective perspective, and today we have our Teres from CMA Uganda, and as I've actually mentioned, Teres has over a decade of experience across Uganda's public and private financial sectors, including banking and treasury, and today he will be taking us through some of the perspectives from the regulatory side and tell us how Uganda's regulatory framework is really evolving to support this product, the unit trust growth and regional harmonization. Teres, I know you're live. Kindly unmute and start.
Good. Thank you very, very much for having me. Please confirm that you can hear me.
Yes, you're loud and clear.
Thank you very, very much. A good afternoon, good morning, Musibe Mutia, Waramse. I hope I got it for Derek.
Yes.
Very, very good. Waramse for our neighbors in Rwanda. Really happy to be part of this call. Thank you very much for inviting us and allowing us to participate in this call. My name is Terence, as introduced by Derek. I serve with the Research and Market Development at Capital Markets Authority. In retrospect to this conversation, from where we sit and from where we see, we have observed a significant growth within the collective investment schemes from the regulatory perspective. We have seen many participants continue to embrace this. Over the past 5 years, we've seen a very impressive growth of almost 70%, where we stand right now. As we speak, we're talking about almost 5.1, slightly over 5.1 trillion in assets under management, and that's impressive from what we see in Uganda. We've seen the retail accounts continue to grow. We've seen participation continue to grow. We've seen the numbers continue to rise. People are continuing to appreciate the collective investment schemes as an investment opportunity, as an asset class. This has not been an easy discussion, because when we passed the regulations over 20 years ago, the act was passed a while ago, about 10 years ago, we didn't see and envision the speed and appreciation that we have seen right now. We saw a very slow growth. We're talking about 10 billion, 13 billion, and the numbers kept growing about 10 years ago. But between the years 2018, 2019, slightly after COVID, we saw an immense appreciation of the sector. Ugandans, at least I can confidently speak for Uganda, and even actually Kenya, we've also observed the same. They continue to invest in them because they got to realize, I can't be able to earn a return. I can't be able to slowly generate a return, especially the fact that the person is licensed by a regulator who continues to oversee the operation. So the regulatory framework, just to speak to it, is really to ensure that whoever is investing within the collective investment schemes is safe. It provides for a custodian, or rather, it provides for a CIS manager who helps you invest on your behalf, and is literally looking out for the best return. What do? They look out for the region, at least within the regulations within CMA Uganda. They are allowed to invest within the region. So their job every single day is to literally look out for investment opportunities. Where can I invest? Where can you earn a return? Where can someone be able to increase their wealth? After the CIS manager, there is a custodian bank. So when you deposit your money, let it be 100,000 Uganda shillings, you deposit it with a custodian bank. Now, the CIS manager does not have his hands on the money. He only has sight of the custodian bank. So he sees the balances and he's able to check and see, I can be able to invest this amount. This is the balance I have. I have to manage the excess to be able to ensure that some sort of float to manage the desires of the market. Thereafter that, is also within the regulatory framework, it also allows for a trustee to ensure that he's overseeing the operations of the custodian, of the CIS manager. So there's there's another eye that's ensuring that these people are doing what they're supposed to do according to the law. And if there's any breach, this is a separate entity. If there's any breach, they get to inform CMA, and CMA is able to get into action. So we get a report from the trustee, and we also get to supervise what the operations are. We continuously, regularly, assist as a authority in Uganda, visit its farms, ask them hard questions. What are you doing great and what are you doing wrong? And then we're able to ensure that they improve their processes. Maybe, David, for the members to know that we are continuously evolving, also appreciating the continuously changing times. And we're also reviewing the CIS framework to ensure that it's abreast with the market condition to allow for increased access through the collective investment scheme. David, I hope I've responded to your question. I submit.
Yeah, thank you so much. This is really a very great perspective, and maybe to just give us a highlight from your perspective or from where you see it. When you look at our Ugandan market and see how this growth has really, the pace at this growth, at which this growth has been, I mean, from COVID-19 and where we are now, we have seen huge numbers, and I know Mr. Mubali will have to give a solid view on that. Have you seen something like an innovation, or how is CMA Uganda balancing innovation with investor protection in this CIC product development? I mean, the role of CMA is investor protection, and if you look at this growth, really it has to be powered by something, and that's innovation. So how are you balancing this innovation with investor protection?
Thank you very much, Delek. You ask a very difficult question. You make me think about moving on a highway, accelerating and braking at the same time. Yes, innovation, first of all, regulation is not primarily meant to stifle and to kill any possibility of thought thinking. Regulation is there to not only to facilitate, but also to ensure that investors are protected. So it's not primarily to facilitate, it's also not primarily, well, it's there primarily to protect. So the point is, how do you facilitate while also protecting? Very, very difficult question. But that said, I think when people know a market is regulated, when people know that you're going to a downtown market and there's some sort of sanity, your bags are not going to be stolen when you're buying that good, when you're not going to be pushed around, there's sanity around. When people have a confidence around the regulator, it helps them invest even much more, because they get to realize that I can be assured of at least what I've invested, and to ensure that there's some sort of safety for what I've invested. My hard-earned money, to ensure that I've kept it well. That said, so how has this allowed for innovation? We have continuously engaged with the fund managers, and I think Mugalia will speak to it. We continue to engage them on thinking about ways in which they can. But we are happy to state also that the market is actually also very, very innovative. We are excited with what's happening with fund managers. They're improving the way they're doing business. They're improving their turnaround time. They're improving ease of access to investment through mobile phones. People don't have to go to the bank to have to send this money. They can send the money directly off their mobile phones. We continue to see increased innovation around turnaround time and settlement. So we see a development within the sector, and we can only be eager to see what's going to happen next. But for us, our role is really to ensure that whoever is investing is protected, that at the very least, when I invest my money, the market is secure. People are secure, they can be able to invest in assets or in asset classes that at least we'll be able to allow for ease of redemption and ease of access. But ultimately, we're here also to ensure that whoever is playing in this field is a regulated party. It's at this point that we also keep emphasizing, please, if you're on this call, if you know someone on the call on the who you know that is investing in an unregulated person, please refrain from investing your hard-earned money with a person that's unregulated, because that way you're going to lose your money and you have no discourse or anyone to run to. But as an authority, we are here to continue to ensure that you're protected and that you can be able to have your money invested with a licensed fund manager or CIS manager.
Thank you very much. If I am to add anything there, I think that your conversation. Thank you very much. And for those on the call, our chat is open. You could keep dropping those questions if you have any, and we would note them. Behind this call, there's a man called Magnifique, and he's the one controlling everything. And thank you, Magnifique. So. Thank you very much once again, Teres. I think we are going to look at the industry now, the perspective. I mean, you have highlighted very many strong points, and when you look at innovation, it's really something that is going to turn the market, really move the market at the highest speed, and we have witnessed that. So we are going to now hear from the industry. And Mubale on the call has been reading Sanlam Allianz investment for over 10 years, and he has a lot of experience. Sorry about that. And from the Ugandan perspective, the CIS market has really grown rapidly, and with over 10 schemes and strong investor uptake. And maybe Mubale is going to tell us what's driving this growth and how fund managers are really designing these products and what lessons other markets can draw, especially our market, Rwanda. I know Tapeli is on the call, and he will maybe give us a highlight. Rwanda is really a growing market, and as you can see, they have 2 CIS managers, and the schemes they're running, they're only 2, but when you compare with Uganda, Kenya, and Tanzania, which Tanzania is also catching up, on average, if we have 3 CIS schemes running, that means there's a high potential for Rwanda to actually have 10, 15 CIS schemes running. So Mubale will actually give us the gist on how these fund managers are really designing the products that are quick to actually uptake, and also what innovation and what environment, the operating environment, I mean, all these, the environment you are in, and also some of the innovations that are coming up are the ones that are driving this growth. And I think you also speak to the role of the digital platforms, because they are playing a huge role in improving access and transparency for these CIC investors. So, Mubale, if you're ready, I'll give you the microphone so that you can give us your perspective. Thank you so much.
Thank you, Delik. I am indeed ready. So, a brief about Sanlam Allianz. We have recently rebranded to Sanlam Allianz from Sanlam, following the obtaining all the regulatory approvals across Africa, and the joint venture that we did with Allianz in 2023. Now, as Terence has mentioned, we do carry licenses across the region, that is Uganda, Kenya, and Tanzania, to do unit trusts. Our footprint continues to expand. We are now in 27 African countries, and hopefully we will paint the entire continent blue. Not all countries are very easy to enter and operate, but we are doing our very best to cover the continent. So to emphasize the discussion right now around CIS, and Terence has already highlighted the growth of the industry to about 5 trillion as we speak. You will notice that in Uganda in particular, around COVID, we saw an explosion of interest. Perhaps people were at home and had a lot of time to understand what unit trusts are or what other available investment opportunities exist. Now, the other trend that we are seeing across the region is the participation of local investors. Especially when you look at the equities market, it is very clear that 10 years ago we had a lot more offshore investors dominating our markets, but over time, the participation of local investors and retail investors, that element is also growing. So the growth is not only in unit trust, but into financial markets as a whole. Now, I guess uncertainty around COVID did put a lot of questions to people's minds, but the result was good for the market, that people focused more on regulated products. So before COVID in Uganda, our CIS to GDP was definitely below 0.5. Now we've grown to 2.5%, in Kenya at about 4, and in Tanzania we're at about 1.6. So the background to the growth also is supported by stable macros, in a sense that any financial product will behave better or very well when the macros are stable. So we have a scenario where governments continue to borrow heavily and they're willing to pay high interest rates. So for Uganda in particular, if you compare our 10-year, the average yield on a 10-year bond, which is averaged about 16%, and net of average inflation of 4%, you can see that you have a real return of about 12. So we cannot underscore the impact of government borrowing and government being able to borrow at high interest rates, which provide most of the products that we have designed a base for investors to participate in. The other element I would want to talk about is the nature of investors. Those who tend to put money aside are by nature risk averse. They prefer products that are predictable, like money market funds or what we would call sometimes umbrella funds or income funds, where you earn a yield and it is sort of predictable that that yield could slightly change, but day on day or month on month, there is some type of growth in your assets. The other products where they are designed around equities or balanced, the uptake on that front has been quite low, but we've seen a good uptake in a market like in Kenya, where the special funds, which are investing in offshore assets and other complex instruments and are generating a return of about 20-25%, those have also started to receive appetite. Now, the other element that has also helped our cause in Uganda is the stability of our currency. Over the last 10 years, we have definitely moved a bit here and there, but we've remained within the same level. And right now we are actually below 3,500. There are markets across Africa who have had wild swings, like in Ghana, and in Egypt. In Egypt, where we had currency devaluations of almost 50% last year, and also Ghana significant depreciation in 2023, 2024. But this year across Africa, we are seeing that currencies are behaving better, primarily because the dollar on average has weakened by about 10%. So that is some of the background that is helping the cause on encouraging investors to take on financial products. The last element I would want to talk about the market that is a bit fringe is we can't underscore the growth of influencers. We can call them financial influencers, but social media has continued to attract people's attention, and they do listen. So there are individuals across different markets who are shedding light on products that are available, not only unit trusts, but all sorts of other financial products. So from our side, I would say that the journey that we've had as Sanlam Alliance is to improve on the experience that customers are getting. And we have invested in technology, and that has allowed us to innovate not a new product, but the user journey. So convenience is key. And we've done partnerships with Standard Chartered, where if you are a Standard Chartered customer, you can actually access a unit trust without leaving your Standard Chartered banking environment. And we've done the same with a few other banks, as well as CRDB in Tanzania. We've also had a good run with the telecoms and other fintechs. Particularly, we're excited about the partnership that we also did with the MTN in Uganda, which has shown good growth. We have managed to reach almost 750,000 customers within a space of 6 months. Just to give you a bit of context, we've operated the unit trust over the last 4 years. We have coming up to about 4,000 customers. But with the technology platform, then it has allowed us to serve more customers much faster, who don't have to fill out any forms. They just have to dial some short codes and be able to invest. So thank you very much for today. I'm happy to remain on the call and answer any questions.
Thank you very much, Mubadi. That was really very informative. When you talk about the environment where we are operating and we're able to squeeze a return of about 13% on the product unit trust, that's really intriguing. And maybe to just pick your mind, this growth in AUM, what do you think is really next for distribution and access? Do you think the role in technology is going to keep playing this good role in expanding the CIC participation? And maybe what one policy or market reform could actually significantly boost this participation in our country or in across the region? You see, IVO is on the call, and she will be giving us some of the things she has seen as they are trying to develop their product, and maybe give us a little bit of the background. But before she comes, you could just highlight about what's next for the distribution and access. Thank you.
So technology does play a pivotal role in shortening the journey between hearing a concept and participating in it. When we look at the numbers, we note that the number one channel for distribution of unit trust or financial products is is a recommendation by a friend. So advertising, or radio, television, and all the other avenues or financial literacy engagements that we're trying to do they don't rank as high as when your friend or relative tells you to try out a product. So our expectation is that, yes, we will be trying to drive the message, but the expectation is that if we can convert one person and that one person can convert another 3, then there is a multiplier effect. What you don't want is after somebody maybe talking to you about, their experience, you trying to now look for us and looking for a form to fill out and sign and do a funds transfer. So we are trying to ensure that the user experience continues to be as friendly as possible and can reach everybody from wherever they are. So in the future, I see a sustained growth driven by referrals, but also technology then bridging the gap of conversion. And I would expect that in not so near future, we're going to see now investors demanding for even more complex products. For now, they're a bit comfortable with money market funds, but as the experience has shown, like in Kenya, where some of the investors into money market funds might want a little bit of extra in the tank, so they are willing to then take on special funds. So I see at least a trend in that direction.
Great. This is really nice. And maybe to pick the last one, I know we have not spoken to maybe challenges, or challenges always with us, but there are so many ways to solve these challenges. And maybe you could highlight a few challenges that maybe fund managers are facing, or these CIC managers are facing to distribute this product. And especially maybe reaching out to retail investors outside urban centers, because you would maybe imagine if everyone around town knows about the interest, but a person who is maybe in there outside the town does not know anything about this product. Maybe just 2 or 3 points, maybe challenges that are being faced, and what are maybe some of the solutions that are being put in place to actually solve these challenges.
So I wouldn't want to call them challenges. I feel they are opportunities for us to solution around. And the big elephant in the room is definitely on reaching everyone. Not everyone can actually invest, because quite a number of Ugandans either don't have excess money to save, or they are indisciplined, and others do have loans and other bottlenecks. But we are working, we are talking to people, we are moving in the right direction. We have more players on the ground, and if each of us as players in the market is covering an area or so, that is a good step in the right direction. We definitely have to keep on guard, and with the support of the capital markets, on ensuring that the space remains well regulated, so that we don't get into challenges of credibility. And like I said, referrals remain our largest source of customers, you want those referrals to be good referrals, not bad referrals. And we also see an opportunity in engaging with influencers across the markets, teaching them more about what products are and what they can do and what they can't do. Because believe it or not, like I said, influencers is another version of referrals. But you'd want that information to come from people who at least have understood the basics of how the products actually operate. So there are bottlenecks in terms of reaching people. There are bottlenecks around the people themselves converting their behavior. But with time, we feel we will overcome.
Thank you so much, Mubali. It is great that we have our regulators on the call, and that's really one of the roles of the regulator to promote these products and try to solution some of the challenges that are being faced by the industry. And as we run through this call, I want to turn to Ivy. Ivy leads BK Capital, and BK Capital, one of the Rwanda's 2 licensed CSM managers, and Rwanda CIS industry is still young, but growing steadily. I've not checked the statistics, but I know about 50 billion Rwanda francs already running in as AUM in the Rwandan CIC market. And maybe as Ivy prepares, I want Ivy to walk her through the BK's journey and the challenges of the product route, and also how BK Capital is engaging investors in the market where awareness is still building, and also maybe try to hint about how BK Capital is navigating low awareness levels among retailers, and also what's working, and do you see opportunities for regional partnerships to actually develop or co-distribute this product? Ivy, you're welcome.
Thank you, Derek, and thank you everyone for making the time for this webinar. So I have a brief presentation, and then we can go into any questions that you may have to better understand the Rwandan market. Let me know if you see my slide.
Yes, yeah, your screen is.
Okay. So I'll start with a brief of, since this is the first time someone is joining from Rwanda, and BK Capital is the market leader here in Rwanda when it comes to the investment industry, I want to start with a brief about BK Capital, how we fit into our group or parent company. And then I'll go into BK Capital's journey, and then touch on the challenges and opportunities that we see in the market. Now, BK Capital is part of a financial services group, BK Group, as you may know it, and is listed on the Rwanda Stock Exchange. And we are the investment banking arm of the group. Under the group, we have the BK Foundation that is responsible for philanthropic business or affairs. Then we have our bank, the Bank of Kigali, that I'm sure a lot of you know because it's been there for more than 50, 60 years. Very soon they'll be celebrating 60 years of existence. So the Bank of Kigali is the biggest arm of the group and the longest living subsidiary, if you may put it, and is the biggest bank in Rwanda as well. Now, we also have BK General Insurance, that's into general insurance services, and then we have our fintech arm, BK Tech House. So that's how we all fit into the BK Group brand and umbrella as subsidiaries. Now, when it comes to BK Capital, we have been around since 2019, when it was formally made BK Capital as we know it now. But before then, it was BK Securities, established in 2012. The fund management part, especially our flagship product, Aguka, started operating in 2020. That was when the fund was first launched. And it's been growing ever since. It started with about 8 billion in assets under management, and we are currently around 34 billion Rwandan francs. Now, the figures are all in Rwandan francs, not converted into dollars or any other local EAC currency. Now, when it comes to the services we offer in general as BK Capital, we have an investment banking license, which allows us to do fund management, corporate finance advisory, brokerage, securities brokerage services. And then we also have a registrar arm as well. So all these departments fit under the BK Capital license as an investment bank. And I can confidently say that in all these areas, in advisory services, fund management, and brokerage, we are the market leaders in those areas. And combined, we lead the market when it comes to investment banking. When it comes to the growth of our assets under management, our current AUM is 146 billion francs, and we have ambitions to take this to 300 billion by 2027, and we seem to be well on our way to getting there, and even more than that by that deadline. Now, when it comes to the collective investment schemes that we manage, the ones that are public facing that we invite the general public to subscribe to are the ones that the one that we all know, which is Aguka, and it's currently about 34 billion. But then, if in the scheme of also managing pensions, we have our private pension scheme, which is currently about 1 billion. It was launched mid last year, and it's currently around 1 billion francs in AUM. Now, we also have private schemes that are not open to the general public. They are specialized schemes, you may say, open primarily to institutional investors, which is our private debt fund, and informed or knowledgeable high net worth individuals. That's our private debt fund. This was launched this year. We also have our USD fixed income fund that is open to Rwandans in the diaspora and foreigners that earn in dollars locally. So those ones, because they are specialized schemes and not open to the general public, you typically won't find it classified in the public facing or public inviting CISs as you have in there. But if you look at the combined AUMs that we have across all these schemes, then we are looking at well over 146 billion Rwandan francs in total assets under management. Now, when it comes to the challenges facing the market, before I go into the challenges, I want to briefly touch on the entire industry size. Now, the key schemes registered under the CMA in Rwanda are the Interiberi Fund, which is RNIT. It's a government-sponsored collective investment scheme that was launched by the government over 7 years ago, and the current AUM is around almost 74 billion Rwandan francs. Then you have BK Capital's Aguka Unit Trust Scheme, which is a fixed income fund, and the AUM is around 34 billion. But in the interest of collective investment schemes, there's also the government long-term savings scheme, voluntary savings schemes that they launched, and it's under the state pension scheme RSSB. They manage, they administer the scheme, and it's managed by RNIT. So if you are looking at that scheme as well, since it's a collective investment scheme, although the focus is more on long-term savings towards pension, it's still one of the schemes that is not licensed by the CMA, because pension schemes are under the central bank. They are licensed under the central bank. And that voluntary pension scheme or voluntary long-term savings scheme, the assets under management currently is over 80 billion. So taking the traditional collective investment schemes as we know them, then we have 107 billion in assets under management. When you add that long-term savings scheme, which has over 3 million contributors in there, then you are looking at AUMs of close to 200 billion Rwandan francs. Now, to the challenges, I'm sure a lot of it is not peculiar. When everybody was starting with their markets, capital markets, and then into collective investment schemes, these are the usual teething problems you find and Rwanda is no different. And the key one is one, illiquid market. We know that the market is young in Rwanda. There's a lot of work that is going in to develop the market rapidly, which I'll touch on briefly. But we are still at, let's say, not infancy stage, but mid-infancy and maybe teenage years sort of stage. And this, we all know the lack of listings on the Rwanda Stock Exchange, especially when it comes to the equity market and the diversification of assets in general across the market. We currently have about 9 or so listed equities, 4 of which are cross listings from neighboring countries. So that requires a little more work to provide additional securities, that if you have those long-term saving schemes that you don't expect them to be doing only government bonds, they'll have opportunities to invest in these kind of assets. So market development around new asset classes is a necessary condition for a thriving investment industry, capital markets in general. And you see that there are a lot of reforms that are coming up under the financial sector strategy, which was recently launched by the Ministry of Finance to address these issues in the market. There's also the narrow investor base. If you combine that with the lack of investor education in general, yes, financial deepening, financial inclusion is very high, but knowledge about capital markets, how capital markets work, and capital market products is very, very limited. About investment is limited, although you have all these people who are subscribers to the state sponsored voluntary savings scheme. When you go in there to ask them about what they know when it comes to investment, even the CIS that they are in, they don't even understand. So there's a lot of work that needs to go into investor education so that they come to understand the products that we sell in the capital markets, including the CISs that mobilize savings for investment. So that there's a lot of work that government is doing. CMA is included in the financial sector. Regulators are all part of the initiative to deepen understanding of financial and capital markets, which will in turn lead to a growth of CISs when they are launched, coupled with deepening of asset classes that are in the market as well, so that the universe is wide enough to make it interesting as an investment professional looking for asset classes to invest. But even beyond that challenge, for us as BK Capital, as we launch our products, because we understand these challenges already in the market, and because Rwanda itself has positioned itself as a financial services hub to attract those not only coming to Rwanda but looking into the East African region, we also position ourselves to be able to benefit from those who are already ahead of us in the East African region, our neighboring countries that have a more variety of asset classes and securities available for investment. So that's how we position our schemes. We just don't look inwards, we look outwards whenever we are setting up anything new, because we know that the opportunity set or the universe in here is limited. But when you combine the universe across the region, then you have a bigger pool of potential investments to look at. And in the interest of doing that too, we've taken the initiative, especially through our brokerage arm, to establish relationships across not only the East African region, but in other regulated African markets where we believe there's potential investment opportunities for us. So we've established linkages in Tanzania, in Kenya. We trade through those brokerage relationships, in Uganda as well, in Ghana, and we are looking to do that in Nigeria, and so on and so forth, so that we broaden our universe, and as we attract people who are using Rwanda as the gateway into East Africa and probably the rest of Africa, then we are also providing the opportunity for them to access those markets, even when it comes to the investment industry and capital markets and products and vehicles that we provide. Now, when it comes to developments, what is worth noting is that pensions are directly when your pension industry is thriving and booming, you can find that opportunities start emerging because It's not just solving the one side of the equation where you have institutions that are ready to come to the market to access capital. But if you don't solve the supply side of the funds, then even when they come, there will be nothing for them to tap into. And pensions is one of the key catalysts when it comes to opening up capital markets, as we've seen in other markets like Ghana, in Kenya, when the pensions markets picked up, assets and management in pensions started picking up. We started seeing these new products coming to the market because they know a home. They'll find someone who would understand, because it comes with sophisticated investors to fund managers that are, and then they can set. So key reforms in the pensions industry is of sorry, is of great interest to us. And recently, the mandatory pension was doubled to 12%, and then government has plans to increase this to 20% by 2030. Yes, most of it is not most of it, all of it is mandatory under the state pension, but we also perceive that the state pension also uses private fund managers. So this money is going to trickle into private fund managers, even though there is not a direct requirement or reform in that regard or policy that is forcing them to do that. They've already started using private fund managers to manage some of these funds. So we see that trickling into the private fund management space, into the capital market space, because if you look at even securities that are listed, most of it, about 50% plus of subscription comes from the state pension, because they will the biggest muscle when it comes to assets and management to be able to deploy. And we see that a lot of the listings that come through the market, whether it's debt or equity, majority of it is by the state pension scheme. The state pension scheme are we also trickling into the capital market, leading to the formation of CISs, products that would want to tap into these funds that are available. And we look forward to more direct reforms that into the hands of private managers, including maybe the establishment of provident fund schemes that can also grow as institutional investors. Then under the CMA, you see that the CMA has been very these past couple of years coming out with reforms around new products, ETFs, REITs, regulations have all come out recently to encourage or act as catalyst to encourage fund managers to create new products or vehicles. So these are the key things that we see as development and opportunities for BK Capital in the market as a whole. And we as BK Capital, we are positioning ourselves to be able to access these. We already have an equity fund that has been approved, and we are looking to launch it early next year, as well as a REIT that we are also looking to launch next year. Now, I'd like to wrap up here with some of the key reforms. We've talked about the challenges in the market, but I also mentioned that government has been very proactive, and already in the new 5 weeks ago, there are bold reforms to reshape the capital market landscape, in addition to the rest of the financial markets. And key among that is to raise domestic savings rate, currently around 12% to 26% by 2029. Strengthen pension sector. We're already seeing the increase in the mandatory pension rates to keep up with the rest of the region. Then encouraging digital savings as well, so that anyone across Rwanda is accessible to them to be able to even save and invest through their mobile phones as well. Key reforms also include deepening the capital markets, modernizing the capital markets, including encouraging SOEs onto the market, so that we have more equity listings that will encourage others to come forward. Because if you see your trusted companies that you know all around Rwanda, now on the Rwanda Stock Exchange, everybody will start asking questions. They will start wanting to understand how the capital market works, and other entities will be interested in also coming onto the market. So key and deepening and modernizing the capital market includes listing SOEs to increase the number of equities on the market, as well as modernizing the Rwanda Stock Exchange to start automated trading. Then we have the reforms around pension that I've already mentioned, and then financial inclusion, which is already high, but government is looking to push a little more, especially when it comes to the youth and women, including accelerating digital financial services. And key around that reform, when it comes to BK, one of our subsidiaries, our biggest subsidiary under the BK group, the bank, is already at the forefront of rolling out a digital financial services ecosystem. Sorry. And then the last reform I would like to touch on briefly is also government's move to increase sectoral linkages, which includes increasing credit to priority sectors like agri to broaden the investment ecosystem. And it also includes harnessing pensions for long-term savings and to encourage more institutional investors, especially through the KIFC, which is Kigali International Financial Center, which is looking to be the financial center in Africa by the 2029 deadline. So that means that KIFC has to position the entire financial sector as the financial sector to know or to be aware of in the region, and as a gateway into the East African region as well. Thank you very much. That brings me to the end of my presentation.
Wow, this has been really insightful, and thank you so much for this insightful presentation. Really intrigued about how these reforms are really going to catalyze the development of this product in Rwanda. I mean, I've been monitoring and also watching how Rwanda has moved from paper, I mean money, to actually paperless, using their phones to make transactions, and it's something that has evolved in Rwanda's market. And I think this one, when you look at this product and the innovation around it, when you blend them together, I think it's going to cause actually a very big impact on this product development. And maybe Ivy, to conclude, maybe you could just give us your experience, what you have seen in the numbers as you try to move or market this product, and what are the key successes so far that you have seen in the market.
Thanks, Alex. So when it comes to the market, if you look at the number of subscribers to these collective investment schemes, if you take the first one, the leading one in terms of the number of members, that is RNIT Interim Fund. It has over 48,000 subscribers as at now, almost 50,000 members. Now, BK Capital Scheme has a little almost 2,000 members in the counting institutions that have members underneath as one. But when you expand that, then it becomes much more than that. So when it comes to even as an investment bank, the clients that we deal with are over 10,000. When you count the underlying members of all these schemes that sometimes come as one into our flagship schemes, then we are much more members than that. But we are looking to grow those numbers. We are looking to increase financial literacy. We are partnering with different institutions across the country so that we can reach more grassroots people with our message. Sorry, with our message and our products. So that is part of our drive next year to increase the number of members in these schemes, so that it can also act as a diversification opportunity for us, because you don't want a concentration of institutional or corporate investors in the schemes, because they come as big accounts and they go as big accounts. But if you have a broader base of retail investors that bring you money and helps your fund grow, the fund is more stable. So our drive is to increase the diversify the membership of all these schemes that we have. Now, when you talk about Ejo Hazer, which I mentioned is a voluntary long-term savings scheme, which is not directly licensed by CMA, that has over 3.6 million members in there. So yes, the message of investment is going down, but not as fast as savings. People are more familiar with micro microfinance institutions, cooperatives, circles, as they call it here. They are more familiar with the savings part of it, but not the investment part of it. And that is where our work is as BK Capital, to now move from savings to investment, for people to understand the linkages between savings and investment, and to broaden our reach in terms of retail investor base in our schemes. Thank you.
Thank you so much. Thank you so much. In the interest of time, we will be looking at the chat to see if we have questions, and then we will request our speakers to give closing remarks. And for me, this discussion really has shown that collaboration and innovation plus a shared commitment will actually scale up this product. And no doubt, the next 5 years, we should see about 10 billion US dollars in AUM across the market. So thank you so much. I'll request Mubale to give us closing remark from his end, and Ivy will follow, then we shall close the conversation. But the conversation continues on the social media, CMA Rwanda, and across the other CMA Uganda, and we continue to get the engagement, and we keep the conversation going. Thank you. Mubale, welcome.
Thank you. So we do look forward to collective investment schemes being a part of an ordinary person's life. There is value to be created, and we can put more money into people's pockets. And we hope that collectively, as we put
Oh, sorry, I think we have lost Mubale. Ivy, could you please go ahead and give us your closing remark?
Okay, so for me, I like to say that on behalf of BK Capital, thank you very much for giving us this opportunity to be able to talk about not just our products and services, but also the market in which we operate and which supports us to grow. We are committed to developing innovative products, funds, and for access by the general public, not just in Rwanda, but across the region as well. And improving access for retail and diaspora investors in all our products that we roll out in the market. As I mentioned, we are looking to grow our assets under management to 300 billion, but we are well on our way to probably exceeding that by the 2027 deadline that we've given ourselves. And so, to wrap up, I would like to say that to all those who have supported us so far, the regulators who have been very supportive, so far, investors who have trusted us, thank you very much for the opportunity that you've given us. And we are always available to explain what you don't understand when it comes to the capital market. Not just investing your funds as an individual, but also if you want to raise capital as a business, we are there for you and to be able to support you through those journeys. Thank you very much again. And as we say in Rwanda, Murakoze Chani.
All right. Thank you so much. I can see Mubare is back. I think he can conclude with his message, and then we shall wrap up this call. Mubare, can you hear us?
Yes, but my network is a bit unstable.
Sorry about that.
You can proceed.
All right. Thank you so much, everyone who joined this call, our speakers, and everyone who participated in this call. Thank you so much. And we will be closing in the interest of time, but please keep watching our social media handles, Sanlam Alliance Investments Uganda, Seme Rwanda, Seme Uganda, and BK Capital for such insightful discussions. And we hope that this conversation really sparked further engagement and action. And we look forward to future dialogues. Thank you so much. Glad I was your moderator for today's call. Thank you.